Seijiro Takeshita is professor at the School of Management at the University of Shizuoka in Japan.
It's quite significant after 2 decades of seeing the deflationary conditions in Japan and a lot of obscure financial policies that came along with it. Now, this is a normalization stage, and to basically be lifting off from this obscure situation to normalize our financial policy. So it is a very big deal.
So why this and why now?
Well, there were prerequisites. Firstly, as Mr. Ueda, who's the governor of Bank of Japan, had been saying, firstly, we need to see the inflationary conditions and also to see the wage rise of the Japanese workers. And he's got both. He's got inflation target of 2% that's achieved. It's a cost push inflation, meaning that it's not as serious as the inflation that you see in the States or in the United Kingdom, but still, we had the inflation for the first time in almost 2 decades. And also the wage rise. Major Japanese companies that came with spring wage negotiation came with 5.2% increase, which is the largest, biggest rise in well over 2 decades, in first time in almost 30 years. So therefore, the prerequisite for this alleviation from this, negative interest rate policy has been achieved.
What do the international markets make of it?
Well, you can see that many people were expecting Bank of Japan to do this. In fact, in spite of the fact that BOJ has risen the rates, the yen has reached 150 to $1, meaning the yen has weakened. It was almost like assurance. I think many of the market participants understand that Bank of Japan cannot perpetuate or continue with the rate rise. They cannot afford to do this because the situation is totally different from Bank of Japan to that of like Federal Reserve in the States or ECB. Basically, considering the very high debt level of Japan and the fact that Japanese economy really isn't brisk, it is very difficult both from economic point and also political point of view to raise the rates continuously from here onwards.
Well, look into the future for us, if you would. What are the potential effects of Japan's return to inflation on its economy, both in the short term and in the long term?
Well, Japan is very vulnerable to external prices, considering that we import virtually all our materials, including oil. And also, if it's the weakening of the yen, the situation gets exacerbated. Of course, it does give a lot of breathing to the exporters, but certainly there is a limit. So it's a very difficult conditions for Bank of Japan and also Ministry of Finance to make sure that weakening the yen does not accelerate that much, but also to give the message that we're being normalized on our financial policies.